Stocks take a breather from sell-off, oil off long-term tops. Global equity markets extended losses at the start of the week after Russian President Vladimir Putin warned that the military campaign in Ukraine would continue, making investors expect the conflict to last longer than expected. Adding to downbeat investor sentiment, the IMF warned that the global economic impacts of the events in Ukraine would be all the more devastating should the conflict escalate. As such, Wall Street stocks plunged on Monday, with indexes suffering the worst session of the year as the Russian-Ukraine conflict kept intensifying. Fresh talks between Ukrainian and Russian officials made little progress on negotiating a ceasefire, adding to investor concerns. The next day, however, the selling pressure in the equity markets intensified after the U.S. announced a ban on Russian oil, triggering another rally on oil prices. Expensive energy products add to the uncertain economic toll from the war, thus pressuring stocks and other risky assets. Also, nickel prices roughly doubled to all-time highs amid concerns of supply disruptions for the metal. Meanwhile, Asian equities rebounded on Wednesday, taking a breather from the recent sell-off. However, most of the major indexes finished lower, with the Shanghai Composite Index losing 1.13% after the official report showed that China's CPI rose 0.6% in February from the previous month. The Hang Seng in Hong Kong slid 0.67%, the Nikkei 225 in Tokyo fell 0.3%, and Sydney's S&P ASX 200 bucked the trend and gained more than 1%. South Korean markets were closed for a presidential election. In Europe, stocks finished with solid gains as commodity prices took a breather and investor sentiment improved despite the Russian Foreign Ministry saying that the response to Western sanctions will be sensitive and precise. In part, the sell-off in stock markets has slowed due to reports that Russia and Ukraine foreign ministers plan to meet in Turkey on Thursday. The Pan-European Stock 600 closed up 4.7%, notching its best day in 2 years. Regional investors are also looking ahead to the European Central Bank's monetary policy meeting for signals as to how policymakers are assessing the fresh challenges posed by the conflict in Ukraine. In individual stocks, Adidas shares jumped 13.6% after the German sportswear company's earnings. The firm reported that its fourth quarter net income attributable to the shareholders climbed 33.6% to 202 million euros from last year's 151 million euros. On the negative side, net income from continuing operations declined 13.8% to 123 million euros from last year's 143 million euros. U.S. stocks posted sharp gains on Wednesday as oil prices corrected lower from multi-year tops. The Dow Jones Industrial Average rose 2%, helped in gains by Salesforce, Nike, and JP Morgan. The S&P 500 climbed 2.6% for its best day since June 2020. The technology-focused Nasdaq Composite gained 3.6% for its best day since November 2020. Netflix gained 5%, Microsoft added 4.6%, and Alphabet rose 5%. Leading the gains, shares of dating service Bumble soared more than 41% after it reported profit and expected growth that was much better than analysts' expectations. Meanwhile, the USD index rallied to May 2020 highs around 99.40 at the start of the week before correcting lower amid profit-taking as risk sentiment has improved since Monday. The greenback retreated back to the 98.00 area and turned negative on weekly charts. Still, the U.S. currency stays within a broader uptrend and could resume the ascent as soon as due to its safe haven status. In oil markets, international benchmark crude futures rallied to fresh long-term highs around $133 a barrel earlier in the week before profit-taking tool the prices to $105 on Wednesday when the futures lost over 13%. The initial rally was triggered by U.S. President Joe Biden's ban on Russian energy imports in the latest move to punish Russia over its invasion of Ukraine. Meanwhile, the United Kingdom said it would phase out imports by the end of 2022. As a reminder, Russia is the world's top exporter of crude and oil products combined, producing 7% of global supply. Following a sharp sell-off, Brent rebounded partially and was flirting with the $113 barrel figure earlier on Thursday. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.